Hello, everyone.
Hi.
Hi, Sander. Hi, Mikayel.
Hi.
Hey,
Hi, how are you guys?
good. You?
Yeah, very well. Thank you for joining us. So we are
Sure.
giving just a minute for Adam to join us.
Sounds good.
Oh, yes. And thank you so much for joining us for our annual SummerSaaS. So the team, particularly the marketing team, has been put together such an amazing work around it. And hopefully the audience and all the founders, particularly the founders, as well as the investor, obviously, they are joining us today. I finding our conference interesting, full of insights, and I think our panel is actually has been people have been waiting for it. So we have enough time, I
Because of
believe.
you, I guess, Donatella, because of
Oh
you.
yeah, you are charming. Thank you. No, I think it's more about you guys actually. So I haven't built, I haven't raised 100 million plus yet. So
Not yet.
okay, so let's see. I'm sure our colleagues. Here we go. Ciao, Adam.
Ciao. Sorry.
How are
Sorry,
you?
guys.
No problem, no problem. We are all here now, and I always
Uh,
embarrass Adam and speak in Italian because it doesn't want to advertise very much, but he's fluent in Italian, Adam.
Vabbè, vabbè.
Cool.
Anyway, okay, so I think we can kickstart this really attractive panel, which covers the emerging tech, emerging Europe tech winning the world market, which I think is a super interesting topic and a very hot topic. So let me tell you who I am so lucky to have managed to secure on this panel. We have Sander Rijdt, which is a co-founder and co-CEO of PlanRadar. And then we have Adam Kostyal, which is Senior VP, board member, head of the European listing for Nasdaq. And then we have
Hi.
Mikayel Vardanyan, Chief Product Officer and founding partner of Picsart. I think we can set the scene by having, sort of I've been told 30 to 45 seconds, but you are way too high profile for that short time. So can you give us at least a minute of introduction about yourself, and then we can go into the nitty gritty of all the good questions that I have for you. So shall we start with Sander?
Yes, sure, no problem. So, yeah, as said, Sander, nice to meet you, co-founder of PlanRadar. I'm responsible at PlanRadar for all the internal lines, which is like, finance, HR, operations, legal, that kind of stuff. And yeah, we've founded the company back in end of 14, beginning of 15. We went on the market with the product, and since that are growing and very active in the construction real estate industry, where we are digitizing the business processes. Me personally, I headquartered in Vienna or living in Vienna, but right now traveling a lot in our 18 subsidiaries all over the world. And yeah, father of three, married, and yeah, happy to be here. Thank you.
Okay, Mikayel.
Yeah, thanks for our invitation. Great event. Thanks, Donatella. So
You're very welcome. Thank you.
I'm currently taking care of Picsart product strategy, so which includes driving the product, driving the monetization efforts, including our subscription business. It's my third company. I've been doing already the startups for a long time. I'm already in this business for 20 years, almost 20 years. So we're growing pretty good for almost 10 plus years. And here we are. The next stage for us now, we're scaling up our company, a set of new challenges, but we're also looking at them as a good new opportunities for us, including the current market condition the whole economy.
Thank you, Mikayel. Adam, tell us, even though everybody knows you anyway, probably more
No,
than they
no,
know
no,
me,
no, no.
which I'm jealous.
No. Everybody knows Donatello. But so thanks again for this opportunity. I head up our listings for Nasdaq, focusing on the EMEA region, and based in Stockholm, where we own and operate the Nordic exchanges, 7 exchanges here. And of course, a lot of the focus is, how do we help companies manage and getting ready for the public markets and accessing the public markets. Equally important is what we've done within the Nasdaq private market space, helping late stage growth companies manage liquidity as well. Privately, father of 5, and happy to be here. So looking forward to the session.
Fabulous. Thank you, guys. I think it's also important to, I think both Sander and Mikayel have been not advertising too much about their amazing businesses, but let me just, for the sake of the audience, I'm sure you know about PlanRadar and Picsart, but I think it's important to actually point out that both companies are, well, PlanRadar is an Austria company, as we said, and Vienna is in my heart because I'm coming from Trieste, so obviously there's a special mention there. And it's a SaaS solution for construction field and management for software engineers and architects, and they've done an amazing job in raising capital from tier 1 investors, which, as we know, is not the easiest of the task. I believe that you guys have more than 300 employees, and now you are headquartered in the US. Is that correct?
No, we are still headquartered in Vienna, but we have regional
still headquartered in Vienna.
Yeah, but
Okay.
regional headquarters in the US and in the Emirates.
Okay, fabulous. And while Picsart is headquartered in the US, am I right this time?
Yeah,
so
Picsart is Melbourne, headquartered in US.
Exactly.
Yeah,
So you are totally fitting our geo and our discussion, because the Armenian roots that I have to say I still have to visit, but something that I'm absolutely mesmerized about is about the Armenian alphabet. I think it's the most beautiful alphabet I've ever seen.
Probably most complex.
Yeah, as well, but this is why it's beautiful. So Picsart provide the photo video editing app for content creators, and as they coming from the CE, as we said, and also they have raised capital from tier 1 investors. I think from Adam, I don't have anything more to add, apart from the fact that you always have all my respect to have 5 kids, because I can barely manage with 2. So anyway,
respect goes to my wife.
Yeah, bless her. So let me start with Sander, a question to both Sander and Mikayel. So both PlanRadar and Picsart raised over $100 million, which is fantastic. And it would be interesting to hear your journey to the initial seed Series A stay around to what's happened to now.
So I can start again. Yeah, like talking about the history. So like we raised our seed round in the beginning of 2017. At a relatively later stage, so we had already around 500 to 600,000 euro in revenue, in recurring revenue, license revenue, which we generated by ourselves. And then we just, understood that, like, okay, the problem that we're solving, it's like an international one. So let's bring some money to scale faster. So we did the seed round, and it was like, I would say, like, in terms of process, it was somehow easy, as we already had traction and everything. So it's a different game than when you pitch, like just with the deck and just the idea. It's a different game. And then we did our Series A in 19, early 19. Here we brought in inside partners from New York. Also, this process was somehow easy for us. So we just, I think the main driver have been the KPIs. When you can show the right KPIs, these guys are fast. So when we did our Series A, it took me like 3 weeks to have like more than 5 term sheets, and after 1 month I had more than 10 term sheets, and it was just like about choosing the right partner. And then at the end we saw that inside partners from New York, they were like most committed, very fast, a lot of additional service that they offer, so we went with them, and so far it was a very good decision. So now they also led our Series B.
And also, if I must say, you both, both you, Sander and Mikayel, share the same partner from Insight, I believe, which is Teddy, and Teddy is amazing. We know that.
No, in my case, it's like it's Thomas Crane, and he's
and Thomas Crane. I thought it was Teddy initially. Okay, cool.
No,
Good
Mike
to know.
Triplett. It's Mike,
but they're
Mike
all
Triplett.
fantastic. I mean, Insight is just their
amazing.
reputation precedes them massively. Mikayel?
Yes, we have bootstrapped since 2011, so until 2014. We were launched in 2011, and up until 2015, we have been bootstrapped company when Sequoia came on board. At that time, we already had tens of millions of monthly active users, so the product market fit was already there. And when Sequoia came, having the world's most prominent VC back us was a humbling and inspiring moment for us at that time, because not many Silicon Valley VCs were founding companies from Armenia, and Armenia was not so popular at that time, and many people even didn't know where it is. It's changed a lot since then, and now everyone and every venture capital, almost every venture capital knows about Armenia. So in many senses, we were outsiders at that time, because it was very unique for non-US company, or the company which do not have the strong presence, let's say, in US in terms of physical office and people, to get the capital from Sequoia US. So that's why it was a really exciting moment for us. So finding the right investors at Sequoia who believed in us and our mission changed everything. And it was all about the fit at that time, and we have decided to go and start partnering with them.
And I think it's also the fact that Sequoia is now in Europe as well is an indication that they're actually taking notice that our geo is increasing massively in importance, and in the fact that we are producing more and more attractive companies. I would like to think. Would you agree to that?
I would strongly agree, and I think you can see it also in both of our histories, like, because it's like also starting bootstrapped and doing business by your own means, like, you need to be more efficient, right? You cannot just overspend on everything. And from my point of view, this is one of the major things why the US VC started to look into Europe or the region, because you, in terms of cash burn and in terms of efficiency and stuff like that, you see, just, if you break it down to the KPIs, there are like big advantages for the European companies. Of course, sometimes it's a little cheaper.
I definitely have to agree to that. And I have, and I think the capital efficiency is one of the strongest points of companies starting from the Central Eastern Europe, and they get there for less capital, and therefore obviously they are more attractive, which is an obvious, it's no-brainer. So a question for all, actually, and we know them. So what do you think there is a competitive advantage of companies deriving from the CE region that makes them capable of competing with the US well-funded competitors? Probably, Adam, also you are seeing some more attractive companies coming from the emerging Europe. So you have any opinion around that?
Sorry, you mean in terms of?
No, in terms of what do you think would be a competitive advantage? I think we cover already one, which is the capital efficiency, and probably they would get to but you look at companies very early,
Yes.
so potential, to make sure that they list in Nasdaq and not somewhere else. So
No,
your
I
origin
think
starts very early,
I
I
think
guess.
yeah, I think through, of course, last year was a very special year where we had more than 700 listings in the US on Nasdaq only in the US, 400 SPACs and 350 operating companies. So it was a crazy year. But a lot, I think one thing that is clear is that there is an appetite in the financial markets for growth companies coming out of Europe or emerging Europe. And I think there are some great examples of that. And I think the more they are financed in the later stage by not only US capital, but also great, growth European capital, I think eventually as the companies grow, they can start evaluating whether or not to list or not, to list or not to list. And I think there is a lot of good examples where the US markets, public markets, have supported European companies access to public markets. And this is driven by the fact that they have, great fundamentals. They're, I think to a certain extent, hidden gems. But more importantly, they are peers to the US growth companies that they have been able to expand, grow, scale on par with the US companies. And in some cases, they have also been able to reach certain regions which US companies have not been able to tap into. So I think, the US investor is looking for comparables. And if they see the right parameters, they're willing to invest and support them. So definitely, we're seeing some great companies access the markets. We had a great Romanian company last year. Valuations have come down, but that's not per se just for European companies. It's on the whole for the whole market. So so I think there has.
I guess.
Yeah, there's been some great gate openers. I think there will be more companies come to the public markets. Maybe not right now, but over time, yes.
Okay, cool. And Sander, Mikayel, do you agree that those are the main competitive advantage of companies deriving from CE, or anything else that you would like to add?
Yeah,
Comparison to
I can add,
US well-funded companies. I mean,
I can add one the most biggest advantage of Armenia, because it's a small country with very limited resources, with the market size is pretty small. So all the startups, all the product startups, when they are starting from Armenia, they're from the first day looking to scale globally. So for them, is the first market, for them is the global market, compared to some other companies which start in US or in bigger countries, when they look first of all at their local market and then trying to expand globally. So we see it as the biggest advantage of the companies who are born in Armenia, because from the first day you see about how you need to go global, how you need to scale global, how you need to sell and market your product globally across US, Western European countries, Asia, and you are constantly in that mode since the first day, which we currently look as a big competitive advantage versus other startups in more established and big countries.
I can agree on that as well, because we again, I'm learning a lot here, because we coming from Austria, it's like a comparable situation, like also very small, and you just, you're in Europe and there are all these different languages, these different ecosystems, and you need to adapt like from day one, exactly as Mikayel said. And there are also many examples showing that it's sometimes very hard for the US companies to deep dive into Europe, because let's take an example. Let's take, Sweden as an example. There are maybe 10 or 11 million people. You need to localize. If not everything is in Swedish, it will not work out. So maybe an American guy can say like, hey, what the heck, why should I localize for just 11 million people? Right? It makes no sense. But on the other hand, it's like you have the same situation. If you don't do it, it will be very hard, of course, depending on the product, but it will be very hard to get traction without being local, right?
This is quite interesting, because do you think that maybe we're going to see a trend a little bit like Israel, whereby companies from emerging Europe would start locally and then move straight to the US Can you see this happening?
Well, I think we've seen this. We've seen many examples of that. I think at the end of the day, there's a lot of values for European companies to stay European, but I think they need to be able to show, whether it's European from a talent pool perspective, whether it's a European point of, to stay focused on the European growth opportunity, but to be able to prove that you can grow in the US and establish yourself in the US is key. And especially if you want to access the US capital markets. Having said that, the US capital market understands if the company would like to access the US market, even though they haven't necessarily grown fundamentally in the US, because they understand that some capital markets are not big enough to support them locally, and therefore can support, find a place in the US capital markets. But at the end of the day, you can still be European, but being able to localize and expand and establish yourself in the US as a part of your growth story, if you succeed with that, I think there is a premium and added value in addition to continuing your growth in Europe. So I think there are some key aspects there to be considered.
Yes, I can agree on that, because like we are right now also in progress of driving the Americas, and it's like it's a relatively late stage, and we had these discussions also some years ago already. Like, okay, should we enter the US? And we decided to say like let's build a strong base in Europe and the rest of the world, because also talking to investors, like telling them there's a reason why you're looking into Europe and why you're looking into the rest of the world, and we want to keep that strength, right? And let's delay US a little bit. But I 100% agree. If you crack the code in the US, it's like so much bigger. It's like entire Europe, and you can scale like crazy if you crack the code. And also, like coming from Adam's point of view, if you are a US software company, your multiples will be higher normally. So it's like it helps, of course. Yes.
Yeah, but don't you think that maybe because of that, it would be probably a lot of companies they're trying to let's say if it's an Austrian company or a German company, they probably trying to crack the DACH region, for example, before attacking the US. So maybe they should try to do in a way in parallel. I know it's about funding as always, but trying to have a earlier strategy for the US instead of just doing step by step like we've been seeing for years now.
I don't know. Maybe I just can answer from my own perspective, but I would say like you should not, because like me personally, I saw too many startups like moving to the US too early, without having a solid base in, let's say, the DACH region, which is like was our core market in the beginning and still is. They moved too early, and then you have costs burn, everything is different, and then maybe your expansion is a disaster because you did it too early, and you lose it's distraction as well, and then maybe at the end of the whole company is blown up. So we decided for us, let's build the base and let's be stable, and let's be like default alive, and then you can move on, then go for the bigger fishes, right?
Yeah, and
Yeah,
I
and I
think it
think I
also
asked
depends
you-
on the company,
Yeah.
and on the company, like B2B versus B2C.
Yeah.
So if you are in consumer
course.
business, mass market business, like in some cases going with only dark, it will be too small for you. But if you are in B2B business, yeah, it makes sense to start smaller because it's a different type of sales model, and you need to have more investment in your first deals versus when you are going broad. Like in our case, we have like 150 million monthly active users across the globe right now. So it depends on that heavily.
And I think I asked the question because obviously having in mind the audience from founders that they just starting, they are very early. So I think I was worried a little bit that they might have that impression to do it exactly that. So it's important that you guys actually tell them no, just do the right way, don't go there too early. So thank you for iterating the message, which I think is important. And let me go on, going back to Adam. So we know, and going back also to what we discussed before, we have over 100 unicorns coming from emerging Europe now, which I think is just amazing. However, not all of them have yet $100 million in revenue, for example. So what trend do you see happening on the liquidity side of things as the company grow closer to this triple-digit revenue?
Yeah. Well, I think, I mean, from a public market perspective, I think the questions being asked by growth investors now, well, is, not necessarily understanding hyper growth. It's about really understanding what is the road to profitability, much more than before. And they really want to understand, how, if you manage your growth a bit more cautiously, how do you what does that reconcile with in terms of profitability and the overall governance of that growth business that you have. I think there's a lot more focus on that now from investors than just demanding hyper growth. I think hyper growth is not being paid or valued as much as it was before from a multiple point of view. So I think independent of where you are in your business, I think growth is always key. But I think being able to understand what triggers that road to profitability, how do you access it, how do you manage it, that's something that you should be much more cautious of as a business, especially in the later stages. And I think that's something that's being rewarded more and more now in the public markets, and also by late stage investors. I think that's a key trend that we're seeing. And the multiples for that higher exponential growth, they're not really the same by far, and clearly are much more aligned with, basically they want to see growth but manage growth. Does that make sense?
That makes sense to me. You guys, do you agree?
Sure, this is like recent changes, right? So
Yeah, exactly. So this is what we're seeing.
Yeah,
Okay, so
as Sander also mentioned, initially when we were bootstrapped, we were always in that mode, to be closer to profitability or to break even at least. So it's coming kind of a bit back to our roots, and that we already know how to do that.
it's an advantage, that you know how to work in that way.
Exactly.
Yeah, I think also that's a comparable, which I think many more European companies have in their roots, I think, than if you look at the average US company or peer. So I think Europe has always been a bit more conservative in that front. And I think maybe European companies are a bit more rewarded in that aspect than the comparables to the US.
Yes.
okay, perfect. So I think they're not going to allow me to go over time, which is a shame. So let me just ask you one more question, Sander and Mikayel. So what do you think is what would you say is the hardest part about scaling a business post-series BC stage?
Okay, now it's your turn. I will listen to you.
Thanks.
I said BC stage,
I see
took over you, Sander.
like you're constantly in this challenge mode. So you always at each stage you have challenged. It's just the size and the complexity of the challenge you encounter at each stage. Especially at stage 3, I see the main challenge as you are in scale up mode. How you can scale the team, how you can scale the product in a managed way to be efficient enough to grow fast and to grow right. So I see this the main challenge, and it's usually it's an operational challenge. How are you efficiently scale your company, scale your product? Because when you start putting more focus on the growth and you start hiring more people, you start doing many things or trying to do many things simultaneously, it goes out of the balance usually, and this happens to every scale up stage companies I've encountered and spoken to. So that's why it makes sense to do it in more a manageable way, to build the right foundation and then scaling to the next level. So that's my suggestion. Build the right foundation, then scale, and do it in a more manageable way, and not do like hyper hiring or like fast hiring, and then finding out what to do with so many people, or not to do many things, because you think, okay, you have enough resources, you have enough money, you have enough people, then I can do like 50 things really well. It never works. So I see that's the main challenge, especially post Series C, when you are in this constant scale up mode and you try to do many things at the same time, and you think you can do it, but it's not the case usually.
Yeah, I would agree on that. Like, of course, it's like when you, it's like super hiring mode. Like when you add a lot of people, and then it's like also the bottleneck right now, to find the good people. So if you're hiring like 30 to 50 new people every month, then of course you must trust your team that they select the right ones, and onboarding must work, and org structures must work, and like this is something that is set up before. Then it can take it. Otherwise, it will end up like you're hiring like crazy, and then suddenly you do layoffs again. And this is especially in our field, like B2B, as you mentioned, it's always a little bit different. Like you have like this reputation thing, like how other companies, especially the enterprises, are looking at you. So it should, like in terms of organization design, work out. And for us at the moment, is like talent, like finding the right people, and in a fast time. That's the biggest challenge, I would say.
Okay, this is fabulous. So I'm really enjoying this panel. If it was down to me, we would chat another half an hour, but I think they might kill me. So what about we finish off with putting Adam on the spot with some prediction? What about that? So,
Yeah,
and I was
we also
thinking,
will be interested to hear.
so I was thinking, so yeah, exactly. I thought that you guys would say that. So let me ask you. So, what is your outlook, Adam, on the exit opportunity and liquidity at IPO level for emerging Europe in the next 12 to 18 months for Nasdaq? Do
Well,
you see a change from last year? I mean, you had an amazing year, as you said. So, I mean,
yeah. Well,
is it
I
just
feel
go
sorry.
ballistic now?
No, I feel
Tell
sorry
us,
for
tell
many of
us.
the companies, that ran that marathon, and at the 41st kilometer, they found out that the markets weren't there for them, and they have to run an additional 30. Those are the companies I feel the most for. I think most important thing, use this time for those late stage companies that were thinking of this to really get your governance in place. I think there will be more and more demand by late stage investors as well to make sure they understand how you're managing your business. And that managing your business is key as you prepare for a potential IPO. Get your company to the spot that it's well run, not only in terms of growth, but also from a governance point of view. If you get that right, then when the window opens, it will open. You have the opportunity to tap into the market. Keep your dialogue with some institutional investors to understand how they see your business, that they learn and see how you're growing. But over time, I think the markets will open up. I think this year will be overall a very slow IPO year. Hopefully, at the end of the year, we will see more and more IPOs kind of trying the market. But I think we're starting to look more 2023 now. And in the meantime, liquidity is key for many, and we are still very active on Nasdaq Private Market, which is helping companies manage secondaries and liquidity. So I think companies have to have a strategy in terms of liquidity for employees and early investors, even in these tougher times. But I think first of all you have to agree on valuations, and I think that's where the market is right now, not agreeing on where valuations are, and I think
That's
it
the
takes
key.
a bit more time.
Okay, I think I like predictions. So yeah, and we can just meet again next SummerSaaS and see how
Yeah.
the year plan out, isn't it? Fabulous. I've got we lost Sanders. Probably had some connection problem, or just maybe he was sensing that I was about to pitch him some venture debt, so I thought I better go. Joking. So I really thank you very, very much to Mikayel and Adam. I mean, it's been a fantastic experience to have you on our SummerSaaS panel, and thank you Sanders as well. So I'm sure I can thank him on email as well. And hopefully we can have you again next year, and I'm sure we're gonna keep in touch. You better tell me when you come to London, so I take you for lunch. And I wish you a fantastic day, and thank you so much for joining us.
Thank you.
Thank
Okay.
you.
Ciao.